LIC, IPO के साथ भी IPO के बाद भी. Let's dive into the case study. Learnings, recent IPO's performance, learning from the Coal India experience, Gen Z and finance, life insurance market in India, invest in LIC policy or LIC shares. LIC IPO is expected to raise around 21,000 crore rupees. The Indian government would be divesting 3.5% stakes in the company with around 22 crore shares. The recent IPOs have mopped up around 1,20,041 crores in financial year 2022 itself. As you can see the numbers here, the finance IPOs have tanked. Food for thought, how will LIC perform? Let's look at the Coal India's IPO. Coal India was the largest IPO in India, also a government-backed company. LIC is similar to Coal India in the above two aspects. Let's see how Coal India has performed over the years. Government of India had divested 10% in Coal India in 2010, being the second biggest IPO in India's stock market history. Here in the graph you can see that Coal India had listing gains of more than 18%. However, its share price has gone down by 45% since it got listed. Adjusting to inflation, the investors have actually made losses. LIC too is a government-run firm. How would it pan out over the next 10 years? LIC as a brand is trusted across India by its 50 million plus policyholders and their families. Gen Z in India is highly financial literate driven by the fintech startups. Zerodha, Upstock and others are driving the stock trading. Policy Bazaar, Insurance Deco are driving insurance. And Grow, Scriptbox and others are driving mutual fund investments. LIC's IPO is expected to attract youngsters and convert them into policy buyers too. Let's look at the insurance industry. According to the report, the total insurance premium pool currently stands at 6,20,000 crore rupees in financial year 2021 and is expected to grow to 12,40,000 crore by financial year 2026. On this slide, you can see the top 4 countries with maximum life insurance penetration. Taiwan being the highest with 14%. In India, it's 3.2%, while the global average is 3.3%. India has a very low life insurance penetration compared to developed nations, and the potential for growth is very high. Similarly, the life insurance density in India is $59, while the global average is $360. India has a very low life insurance density compared to developed nations. Here too, the potential for growth is very high. LIC is losing market shares and other risk. LIC versus private players. There is a steady decrease in the market share of LIC from 72% in 2017 to 64% in 2021. Private insurers are capturing the market. And hence, LIC is taking efforts to capture more market share by focusing on youngsters in their advertisements and also giving discounts to IPO shares to policyholders. Looking at the trends, should you buy LIC shares or LIC insurance? For that, let's take a look at the returns from buying LIC share versus returns from buying LIC policy. For LIC policy, considering LIC's new money back plan of 20 years, calculating the total premium payments and the bonus, the return comes to 191%. And if the same amount are invested in shares of LIC IPO, then what would be the returns? The expected offer price for one LIC share is 949 rupees. SBI Life Insurance, a similar company with a PSB-based backing, has had a growth rate of 14% over 10 years. Hence, here we have assumed a growth rate of 10%. The investment scenario will be as below, with the issue price of 949 rupees and growth rate of 10%, LIC share prices will reach around 5,804 rupees in 20th year. And hence, the return on investment from LIC shares would be 241%. Thus, from the above analysis, it can be seen that investing in LIC shares would be a better idea than buying its policy from a pure investment perspective. Key takeaways: insurance industry has huge growth potential. LIC needs to recapture its market share. LIC needs to attract the Gen Z. Do not buy LIC policies for investment, buy only for insurance. And for investment, buy LIC shares. And invest in LIC, IPO के साथ भी, IPO के बाद भी. Thank you.